China's exports tumbled for a fourth consecutive month in August in another hit to the manufacturing sector in the world's second largest economy. Shipments abroad fell by 8.8% in dollar terms from a year ago, while imports dropped 7.3%. August's contraction was less severe than expected and better than July's decline of 14.5%, the worst since the start of the pandemic. Exporters have struggled with high global inflation as Western consumers cut back on electronics purchases and domestic demand slowing. Let's get more on this now with Neil Wilson in London. He's Chief Market Analyst at Finalto. Neil, thanks for joining us this morning. Now, compared to July, last month's trade numbers seem to be somewhat of an improvement. Does this indicate a possible stabilization in China's downturn, or is the worst yet to come?
Yeah, I think, probably we're roughly at the trough. It's a bit like the interest rate cycle in the West. We're probably roughly at the top of that, and we're roughly maybe at the bottom in terms of demand in China. We're yet to see whether or not there's a broader sort of financial crisis there in terms of the property market. But again, that's probably playing out as we speak. So I think, the demand picture in China is obviously weak. That reflects weak global demand. But also it reflects, I think, shifting dynamics in terms of global trade flows that were taking place before the pandemic, amid those US-China tensions, the trade wars, and also post-pandemic with the disruption to supply chains. And increasingly, they're exporting more to Southeast Asian nations, less to the US and the West. And that's going to have an impact as they adjust to these sort of changing dynamics in terms of global trade.
Right, China's official growth target for this year is 5%. Given the current circumstances, does this seem realistic to you?
Well, the Chinese figures are always, you always take them with a pinch of salt anyway. I think they are struggling to hit that 5%, though. It seems that the PBOC and the wider authorities in Beijing are concerned. That's why they're continuing to stimulate the economy. And I think the figures today will probably engender some more stimulus, maybe some more cuts to interest rates and that kind of thing as they try and pump up the economy in order to hit that target. They're obviously really keen to hit that target. But I think, as I said, it's not just that global demand is weak. It's also reflective of this wider sort of structural shift in the way that China exports to the rest of the world.
Right, Neil Wilson there in London. Thank you for your analysis.
Thank you.
Now to other top stories from around the world. Germany's industrial production has weakened more than expected in July, further erasing hopes of a manufacturing rebound in Europe's largest economy. Output declined 0.8% from the previous month, missing economists' forecasts of a 0.2% fall. The country's manufacturing sector is struggling with dwindling orders, sluggish output, and high prices. Commercial insurance market Lloyd's of London has swung to a first-half profit. Lloyd's, which has more than 50 insurance members, has posted a pre-tax profit of $4.9 billion for the first 6 months of the year, compared to a loss of $2.2 billion a year ago. CEO John Neal says rising concerns over the global economy are pushing more people to take out insurance despite higher prices. And the Bank of Canada is keeping its benchmark interest rate unchanged at 5%, but says further rate hikes may be on the way. Canada's annual inflation increased to 3.3% in July, with economists expecting it to increase further as fuel prices rise. Canada's economy has stalled in the second quarter of this year, with GDP contracting by 0.2% to 2.6%.